Hey guys, this is Julie. Hope y'all can hear me. Everything's working. Make sure my mic is working. Yep. Okay. So we had a little bit more of volatility than I was expecting, but that's good. The play of the day was really breaking this 30-day one up here this morning. We were sitting on it, and then it flushed, and it's coming down to the 23-day one, which is sort of acting as the mean in between this larger distribution, the inside of the 30-day distribution, right? So sort of acting as the mean. But the 20 VIX is the strong GEX open interest. It has been the strong strike for the entire month of March. And so it was fitting that they're returning at 220 to go into the expiration, which is tomorrow morning, not Wednesday because of the Good Friday holiday. So tomorrow morning, I've reported this last week. So that's a little bit odd, isn't it? Tuesday a.m., 8:30 a.m. at the open. So we're going to see some more volatility at the open because of that. And however these dealers are positioning going into the close, the roll, they're going to be rolling everything today. So what was exciting for me was using this Black-Scholes model to position the premium to get these levels that the market stayed in for a couple of hours, and well, from 7 to 9, so that is a couple. And then it sort of inflected and broke through it, and once they broke above this daily one, the dealer sort of was like participating up, rolling up at that point. So having it, leave our daily one sort of caught me off guard. And we did get that carry through into 5,700. So a little bit more of a range extension on the drop in volatility. And we never really made it to 20. So it sort of just drifted up. And there were some, weekly, monthly levels that came into play. The weekly one right there on the nose, but not really anything on the monthly or quarterly. Um, we do have a 90-day one at 57.50, 12 week, sorry, 57.48. But for all intents and purposes, it's sort of difficult to read this today. I think tomorrow we'll get better idea of what is shaping out. We'll get some, hopefully, some new lines with this new high. Even though we were going back inside the distribution, though, so we won't get a new line. Our 30-day ranges will stay the same. So we just kind of a poor high is what they call it. So 57.60 on the new contract, June, and 5,700, 5704.07 on the March. So the daily 3 on the SPX and the VIX, and the NQ did well. It just followed along lockstep with ES today. nothing there, and I haven't changed over to the, higher time frame contract. We did get to the, monthly 2, which pinned it. So this might have been our pin. This may have been the reason why we didn't get the daily 2. We did run into a monthly 2 pin at 19,948.75. And so that this is kind of cool. We went down to the monthly 2 and then back up to the monthly 2. So, um, 4-week and 30-day. That's a monthly trade days. Even better. So that's 68% of the month. So I'll have my contract roll for tomorrow set to June for all the instruments. And the options that Quick Strike, I don't think they're going to change their sheet tomorrow. I'm not sure. It might be the 21st. So we may have the options, lag behind the contract. So um, we always have this transition week for the option positions before they roll. They take it down to the last day of the contract expiration, which I think is March 21st. So looking at my calendar real quick. Yeah, that's Friday. So we'll have Tuesday, Wednesday, Thursday, and Friday. We'll have to interpolate between the option levels and the new contract. So I'll get that done. And I have a firmer grasp on how I'm doing this with the R vol and the H vol. Um, with the put premium and call premium. So it's really coming together. It's gelling for me. I think this framework is really going to be good. I didn't update it today real time. I wanted to watch the market and see the 30-minute ranges, um, how that played into your daily range breakout. And I'll just show you a chart and show you what that looks like real quick. So you can see the market was showed the upside, range breakout between 7 and 9, and then we flattened out on the volatility. Um, and it drifted up on this second leg in. So getting this reversal where we drifted up 58 points. Um, with an 11.5 point corresponding move to the downside. Um, on the oscillator just shows you that vol crush. And that's what's so difficult for me in correlating the vol crush drift into a measurable point range to get that excess skew for the strategy on these 30-minute ranges. So I'm working my analytics, my math on this, trying to see what I can do to compensate for that. But that is where I was today, putting my head around how I'm going to show reversed bull crush into just a rally all the way up and trying to be able to measure it. All right. So that'll be fun. All right. But otherwise, I still do think it's a good system. We had the daily um, range at 102.75. And so you can see here it's got it at 103 on the daily over here. Um, it was still underneath the 3, but we never broke the 2. I thought we were going to break the 2, and we were pinned at 57.50. So they did pin it instead of allowing it to hit the target, which sort of was a little bit concerning. But so I'll get the pieces put together and look forward to working with you on this framework. I do think it is going to be fantastic. All right, so I will talk to you guys tomorrow. Have a great evening.